All right, everyone. Thanks for joining us for our next edition here of our franchise sales and marketing trends. And I'd just like to thank everyone for joining us and tuning in. And just as people are loading into the live session here, I always like to do a quick housekeeping item to talk a little bit more about what this session is and what it covers. So, my name is Tom DuFore. I'm the founder of Big Sky Franchise Team. And excuse me, uh, excuse me, boy. Uh, uh, and as we take a look at our current franchise sales and marketing trends, if you've never joined us or listened or tuned into this, if this is your first time here, just to give you a quick high level overview, we're going to cover some macroeconomic data and slowly drill down to some more microeconomic data into small business and franchise information and talk about how this may be impacting your franchise sales efforts or things that you might want to be talking about. So, by way of just getting started, I'm going to share my screen as everybody is loading in here, and we will start talking through the first section of our presentation here. So, let's see. And the first chart we're going to talk through is the Purchasing Managers Index. And by the way, if you have any questions, feel free to type it into the chat or raise your hand. And here we go. There we go. All right. So our first report here is from the Institute for Supply Management. They produce what's called the Manufacturing PMI, the Purchasing Managers Index, each month and have done so for many decades. And the Purchasing Manager Index is at 47.6% for the month of August. So I'll read what it says for one of the little blurbs here. It says the U.S. manufacturing sector contracted in August as the manufacturing PMI registered 47.6%, 1.2 percentage points higher than the reading of 46.4% recorded in July. This is the 10th month of contraction and continuation of a downward trend that began in June of 2022. That trend is reflected in the manufacturing PMI's 12-month average falling to 47.8%. And what's important for you to know is that the manufacturing economy break even line is 50%. So when it's at 50%, the manufacturing is at a break even. And then for the overall economy, when the manufacturing is at 48.7% or higher, the general economy is break even or expanding. When it's below that 48.7%, it's contracting. So we see here that 47.6% is 1.1 points lower than the overall economy break even line. And what I do like to see here, though, is that we've had two consecutive months back to back for July and August where we see the manufacturing just ticking up a little bit. So we'll see if that becomes a trend and worth noting. But it's something that I thought worth drawing attention to. So you can kind of see here that it's just hovering right below that break even number. Okay, our next number here is the Institute for Supply Management report on business. Oh, and one thing about manufacturing, why I talk about this, manufacturing tends to be a leading uh, a leading indicator. So whatever's happening in manufacturing, we may see occurring in the economy in maybe 6, 12, 18 months. Next is the service economy. This is the Institute for Supply Management report on business, their services purchasing manager index, and it's at 54.5%. And it says in August, the services PMI registered 54.5%, a 1.8 percentage point increase compared to the July reading of 52.7%. A reading above 50% indicates the services sector is generally expanding, and below 50% indicates it's generally contracting. A services PMI above 49.9% over time generally indicates an expansion of the overall economy. Therefore, the August services PMI indicates the overall economy is growing for the eighth consecutive month after 1 month of contraction in December of 2022. So you can see here, it's nice to see that there seems to be a trend of bouncing upward, of going up and to the right on this report. And if you look at the manufacturing, it's just under that break even, and the services is showing it's just above that break even. So a little bit of a conflicting report, and probably not all that different from what you might be seeing. I think it's a good indicator of just kind of broadly what we're seeing. It's just a little bit of kind of hovering right now. Next is the hospital Purchasing Managers Index. This is the newest report that the Institute for Supply Management has produced. And the report shows that the hospitals contracted to 47.5%. It says economic activity in the hospital subsector contracted in August for the second time in 4 months after 35 consecutive months of growth, say the nation's hospital supply executives in the latest hospital ISM report on business. Hospital PMI registered 47.5% in August, a 5.8 percentage point decrease from the July reading of 53.3%, indicating contraction after 2 consecutive months of growth. So I'm going to arrow over to the chart here, and you can see this hospital has been a little all over the place. And so you see all of 2021, it had some relatively high growth. I would imagine that was largely driven from COVID related purchases and so on. And then early March, you just see a crash down of from the Purchasing Managers Index, and probably driven from the reduction in COVID related items purchases. And then it's just kind of been zigzagging throughout 2022. And now in 2023, we still have zigzags, but it's kind of you can see a trend line starting to form over the last 8 months, and it's trending downward. And so it's zigging up and then down and up and down because some of these big swings. So we'll see how that continues to move over time. Okay. So the next tier item we like to take a look at is the U.S. unemployment rate. And it says, this is from tradingeconomics.com, the United States unemployment rate. And it says the unemployment rate in the U.S. rose to 3.8% in August 2023 from 3.5% in July, the highest since February of 2022, and above market expectations of 3.5%. The number of unemployed people increased by 514,000 to 6.355 million, and employment levels rose by 222,000 to 161.484 million. The so-called U6 unemployment rate, which also indicates people who want to work but have given up searching, and those working part-time because they cannot find full-time employment, went up to 7.1% in August. It's the highest since May of 2022, from 6.7% in July. The labor force participation rate increased to 62.8%, the highest since February of 2020, from 62.6%. So I think this is really interesting and worth noting, is that the labor force participation rate increased to 62.8%. That means more people are looking for work. They're coming back to the workforce, and that the labor participation rate in 2020 was 62.6. So it's the highest since that February of 2020. So that means the labor force participation rate has finally hit and exceeded where it was for pre-COVID numbers. And I think that's a good thing, and maybe part of the cause here for the increase in unemployment rate. So I'm going to show the 12-year trend here. You can see on this Trading Economics report, I'll do the 5-year trend. Let's see, here's our trend line. So you can see here, all things considered, it's still under 4% as a whole, and it's pretty consistently been under 4% since about 2022. So I think that's good overall. And again, I think seeing more people come back into the labor force is a good sign and a good thing for business in general. I know it's one of the biggest struggles that I'm hearing from our clients and from their franchisees, that finding staff is challenge. So it's good to see more people coming back. Okay, let's take a look at the U.S. inflation rate. So I'm going to show the chart here, and you can see from this chart, this is from tradingeconomics.com, and it's for the United States inflation rate. So you can see the 1 year for August, it ticked up to 3.7%. And it reads that the annual inflation rate in the US accelerated for a second straight month to 3.7% in August from 3.2% in July, above market forecasts of 3.6%. Oil prices have been on the rise in the previous 2 months, which, coupled with base effects from last year, published it in the inflation, or excuse me, pushed the inflation higher. In 2023, energy costs fell 3.6%, much less than the 12.5% drop in July, and with prices declining at a smaller pace for fuel, oil, and gasoline. So you can see on this chart that I'm showing, this is the previous 12 months. Now I'm zooming out to the previous 5 years, and you can see the steep rise. You have 2020 here where it fell, and then into 2021 with the steep rise and peaking in 2022 and declining here for about a year, and recently the last 2 months popping back up again. So I know I say this every session here, but if you've got franchise prospects, the reality is inflation is not stopping. It doesn't seem to be stopping and won't be stopping. And while inflation has curtailed, the thing I like to show is that it's it was 3.7% increase over last August of 2022, which you can see here was, close to that 8%, roughly around that 8% marker. I don't have the exact numbers in front of me here to look at those, but you can get a quick assessment by looking back right around that time window, which was 8% over the year before, which was up over the year before that, which was up over the year over that. So the reality is every day your franchisees, or especially prospective franchisees, wait to buy that franchise location, their cost is going to be more. Cost for everything is just continuing to go up. And same thing would be if you have franchisees and they're in the need of doing some store updates or bringing things up to the current brand standards. Again, costs are just continuing to increase and go up. Next, I want to take a look at the surveys of consumers. It's from the university. It's a report produced by the University of Michigan, and it's the Index of Consumer Sentiment. And I like to click on this PDF for the last 50 years. And you can see here the recent number is just under about 70 for the index. And you can see since it bottomed out at the end of 2022 and it's climbing back up, which is great to see. Still at low numbers, looking at this historically, not many time periods where it was this low. But what I like to see is this trend on its increase, on its way up. So it's still trending up to get that going. So I think that's a very positive thing to see that despite some of these economic conditions that I'm sharing, inflation with a little tick up, unemployment with a tick up, although counterbalanced with the inflation, or excuse me, with the unemployment tick up, we have the tick as well with the labor force participation rate. And then we have mixed results between the hospital PMI, services PMI, and the manufacturing PMI. All things to me indicating that we're just kind of in this little window of where it's, kind of hovering. It's just kind of hovering, depending on maybe which industry or sector you're in. You may be feeling a little dip, you may be feeling a little growth, but you're kind of hovering there. So I just like to point that out. The next thing I like to take a look at is business formation statistics. Now, the report is not out as of yet. Let me refresh this page here. Nope. This is still back from August of 2023 for the business formation statistics. I thought that they would be out. So this is just a repeat, but it's from the U.S. Census Bureau, the United States Census Bureau, and they have an aggregate of the business formation statistics. And what you can see here is that for July of 2023, 469,557 new businesses started, fast approaching that 500,000 number again. It's getting really, really close and trending upward. And if you were unsure if this number of new business startups was going to be fading. It is looking to continue and gaining speed. It's accelerating. What does that mean? Well, to me, it continues to reinforce that entrepreneurship is on the minds of the American labor force. They are thinking about starting businesses. Certainly, some of these folks may already be entrepreneurs, but these are people that they have new business on their mind. They're thinking about chasing their dreams, going after it, and doing this. And you can see that it's literally more than a 50% increase, or yeah, it's more than a 50% increase from where it was in pre-COVID numbers. I mean, it's incredible with how this is growing, and what it looks like right now. So, just food for thought. If you're unsure, if you have prospects, candidates, people you're talking to that that have either ghosted you or gone quiet or not really, kind of maybe stuck in limbo, um, this is a good time to always go back and reiterate to them that franchising allows them to be their own boss, be the captain of their own ship, and to be in business for themselves, not by themselves. And they can, and these statistics, to me, these new business formation startup statistics indicate that people have that startup mindset in mind. So just keep that perspective as you're starting to go through it. All right, next report is from it's called the Small Business Startup Sentiment Index. This was released September 6th of 2023. And the top of the report reads, franchiseinsights.com has reported business startup sentiment trends data with monthly surveys since January of 2020. The Small Business Startup Sentiment Index is derived from a monthly survey of individuals who have recently inquired about businesses or franchises for sale on the digital assets of Franchise Ventures. This survey was conducted August 24th through the 31st of 2023. And the headline here that I really like, it says, aspiring franchisees see September as prime month to launch startup process. Okay. So as you can see here, it says 60.4% of respondents agree now, right now, this month, September, is a good time for startup. And you can see this sentiment climbing here. Hasn't been this high in 3 months. And so you see September, people are anxious. They strongly agree that now is the time. So if you have prospects in your pipeline, if you have franchise buyers that you've been talking to and maybe they've been on hold for 6 months or you haven't heard from, I'd be calling them to say, hey, now's a great time to be thinking about moving forward with the franchise, to get this signed up and get you in queue before the end of the year and get you started, because these respondents clearly are thinking that right now is the time. So just something for you to be adding into your repertoire, to be talking about, or figure out how you can incorporate this into your presentation and discussions with franchisees. So let's take a look at another one of these charts next month. Okay. Funding access is the key, but about the same over the last 3 months. Here we go. 73.3% say funding or access to credit is the biggest factor in determining if they're going to start a business. So I'm going to zoom in on this chart, and I really like this chart. They've been tracking this for a really long time. And you can see on the far left, we have funding or access to funding. When they ask these people, these potential budding entrepreneurs, if you're going to start a business, what are your concerns, right? What are you thinking about that might cause you from opening this sooner or maybe delaying the starting of your business? Well, 73.3% said that funding or access to credit is their primary factor, or their biggest factor. 35.6% said economic climate. And you can see it's dropped substantially over the last 4 months. It's down to 35.6%. The stock market is 11.9%. Political changes is 15.8%. That decreased from last month. Regulatory changes, we see here a little uptick from last month to 18.8%. Tax law changes has bumped up a little bit to 19.8%, and other is at 11.9%. So the overwhelming majority you can see here is that nearly 3 out of 4 respondents say funding or access to credit is their most important. So if you're a franchise broker, if you're a franchisor, make sure you have some funding options available to help your franchisee find that funding. Just some referrals, right? There are lots of great franchise lending brokers and franchise lenders and in the franchise supplier community that are able to provide some help, or maybe set something up with a bank that's already familiar with the franchisor and the franchise offering. And then economic climate is kind of what not kind of, it is what we're going through here today. So having a sense of this and how your franchise is responding to these economic conditions. So make sure because we know that economic climate's the second most important issue, know what your franchise system is doing in response to these economic climates or economic conditions, excuse me, and things that have going on, so that even if your prospect doesn't ask about it, there's a good chance they're thinking it, and they're just not ready to share that with you yet. Okay, let's take a look at, here we go. All right, here's the generations just to show what percentage of people are buying. So the largest percentage of buyers right now, 54.5% of all buyers, are the Gen Xers. So people born between 1965 and 1980. The second largest is the millennials at 24.8%. The third largest is the baby boomers at 17.8%. Then we have Gen Z or later. Their share is starting to grow. They're at 3%. And then the silent generation before 1946 currently is looking like it's showing zero or close to zero. It looks like last month was maybe around 1%. So that is the Small Business Startup Sentiment Index by Franchise Ventures. All right, a couple new reports that came out from Franchise Insights by Franchise Ventures. This was released September 20th of 2020. Oh, it says September 20th, but today's September 15th, right? So I don't know, maybe there's a typo on the date there. And it says the hidden value in franchise lead generation, lifetime value of a prospect. So it says 56.4% of portal leads expect their startups within 3 months. So when they asked these these people that were inquiring about buying a franchise, when do you plan to start up? Well, 38.6% said they want to start next month. 17.8% said 2 to 3 months. 15.8% said 4 to 6 months. 11.9% said 7 to 12 months, and 15.8% said longer than a year, or they just don't know. So that means one of the questions I get all the time from clients and franchisors is, no one calls me back. It seems like, I get ghosted. People don't call me back. Well, if you're wondering, I think this is it's some great data to look at. It says 56.4% of portal leads expect their startups within 3 months. That means that 43.6% are expecting to be longer than 3 months. So it's almost half of the people that are inquiring about buying a franchise are thinking longer than 3 months. And you can see that it's it's pretty evenly split between 4 to 6 months, then 7 to 12 months. And you have almost 16% of people saying it's longer, or they just don't know when they want to do it. And 7 to 12 months, 11.9%. So you're talking almost 27% of people, almost a quarter of the potential franchise buyers are looking at setting this out for longer than it's 6 months from now. So if you're wondering why maybe someone might be coming into your system and not ready to buy right away, this is a great indicator as to why. So I just want to point that out. I've been talking with clients a lot lately about why they need to make sure they're keeping a regular email campaign or contact campaign with franchise candidates that have gone cold or unresponsive, because they might not be ready today. They might be entering your system today to buy a year from now. Don't discount or discredit them right now. It's very likely And even just based on this report, half of them are thinking longer than 90 days. And also to you franchisors out there that are expecting every new lead to convert in the next 90 days, your expectations are misled and are just not accurate. You're setting yourself up for failure. So just know and understand that this data here is a great representation. And by the way, this is something, if you're in franchise sales, I'm sure you see this. So it's actually nice to see that, hey, this is what you're experiencing. You just don't have the collective data to share or summarize that. Okay, and this is another that report that was released, and this one says September 27th, 2023. So I wonder if the franchise, if because it's September 15th right now, I'm not not mistaken. So maybe there's just a typo on the date, or these were maybe released a little early, but it says a reliable source for lead referrals to your franchise development website. It says 66% of portal leads visit your franchise website afterwards. So that means out of all the prospects that submit an inquiry on these franchise portals, 66%, or 2 out of 3, come to your website. And out of those that all come to visit your website, 21% submit a request for more information. So that means about 1 out of every 5 portal leads is actually coming to your site and then submitting a contact form off of your website. So that's something that I've generally seen in franchise sales for most of my career, that trend to be true. And these numbers just continue to validate that. And then finally, as I always like to close out every session here for franchise sales and marketing trends, just to talk about what are the most popular categories for franchise inquiries today. So this is from franchiseinsights.com. It's called franchise. The heading is franchising data by category. And it says our vast proprietary data set permits analysis of franchise and business buyer interest by category, including trends over time, along with the category composition and geographic and demographic differences. The following franchise categories showed the greatest inquiries on the Franchise Ventures platform of websites and mobile apps over the last 90 days. That's why I like this. They update this, I believe, monthly, and it's a rolling 90 days that they show. So we see home services has popped and surged way up again, that 24.8%, nearly 1 out of every 4 inquiries that's coming through is for home services. So if you're in home services, expect that to be coming through. If you're a franchise broker, know that about 25% of your prospective buyers are going to be interested in a home services offering. So make sure you've got some good options to be presenting. Number 2 on the list is senior and healthcare. 13.5% of all inquiries were for senior and healthcare. Business services at 12.7%. Cleaning and maintenance at 11%. Food and restaurant at 10%. So those are your top 5 categories. And those are the only 5 that are exceed 10%. Then we have the number 6 on the list is financial services at 4.7%, child-related 4.4%, education 3.4%, real estate 3.4%, and pet services at 2.8%. So these are the top 10 categories. Now, obviously, what does this mean? Well, it means if you're in one of these top 5 or 10 categories, it means you're probably going to have an easier time finding leads through these franchise portals. If you're not in one of these top categories, you may have a little bit of a harder time finding or securing opportunities through the franchise portals. And so you may need to list on several of them or seek additional marketing support to get to the lead volume you're looking for. So with that, I'd love to close out the session here and see if there are any questions. If anyone has any questions, please raise your hand, type it in chat box. I can unmute you. If you have not subscribed to our podcast, please do so. It's Multiply Your Success, as well as the Franchise Your Business podcast. We have 2 great podcasts. The Franchise Your Business podcast replays all of our webinars here. So if you missed a recent webinar, you don't have time to maybe watch it on YouTube, go ahead, check us out on our podcast channel that you can listen to when maybe you're just taking a little walk or working out or whatever that might be. And then for the You can also catch us on our YouTube channel, which is just Big Sky Franchise Team, and we have over 300 videos posted up there and growing. So thank you so much. I don't see any questions today. Thanks so much for being here. I hope you have a great rest of your day and a wonderful weekend. Thanks, everybody.